Last night, I started off by researching Hooters getting bankrupted by private equity and ended up uncovering the next 2008 level economic collapse. And they're hiding the bubble inside a private equity black box that makes it almost impossible to see what they're doing. Almost. This time, they're not going to collapse the banks and make it too big to fail. They're going to bankrupt the entire American pension system. I'm almost too afraid to make this video, but it has to be done, so let's get into it. In 2008, investors and bankers were able to crash the world's economy by engaging in risky, unethical bets and investments, and they did it right out in the open. They've learned, and this time they're doing it again. Bigger investments, bigger risks, same playbook, but they're doing it behind the smokescreen of private equity in bigger numbers. They're creating a bigger bubble than before, and it's not somewhere down the road. It's here, and it's about to pop. You see, for the last month, I've been trying to figure out why these companies that private equity had acquired were failing even though they were still succeeding. Joann's, 97% of their stores are still profitable, and yet they're still bankrupt. But they weren't bankrupt a year ago, and they still had the debt that private equity had stacked on them a year ago. So I wanted to know what changed. The same thing with Hooters. Now in 2024, private equity bankrupted 110 businesses, and that was almost double their previous record. There had been huge increases in the amount of bankruptcies each year over the past 3 years. But I didn't know what had changed because private equity had held many of these businesses for several years and they were still succeeding. Until I got my hands on an economic report and an article and found a term that nobody could explain to me. The term was back floating rate loans. I didn't know what that meant, and no article would explain it to me. So I had to go and do research in the financial prospectuses of a bunch of financial investment firms. Guys, in the last few years, private equity has taken out $3.8 trillion in adjustable rate loans. These are adjustable rate loans. These private equity firms took out adjustable rate loans. And so for the last 3 years, as our interest rates have gone up, every 30 to 60 days, the money due on the loans they stacked on top of these companies has gone up every 30 to 60 days. That's why these successful companies that private equity had acquired are suddenly bankrupt, even though they're still making money. They're bankrupt because they're paying adjustable rate loans. But it doesn't stop there. It gets so much worse because my next question is, why are the banks willing to give these risky loans to these private equity firms knowing it's going to cause them to fail? And the answer is because the banks aren't going to keep them on their books. The banks are immediately repackaging these adjustable rate loans as something called CLOs, right? Which are then packaged and sold off to our pension funds as really great debt. And they tell them that it's a diversified portfolio. Are you hearing The Big Short in real time? Literally, all of these companies are getting bankrupted in greater and greater numbers. And all of this debt is adjustable rate. And all of the bankruptcies are skyrocketing in this direction. Now, if you look at this graph, you can see that aside from 2020, which is obviously an anomaly, right now, private equity, that's the yellow section, has double the highest number of bankruptcies they'd ever had prior to last year. And that number is climbing this year. $3.8 trillion. $3.8 trillion in this debt, okay? I want you to look back to 2008. Do you want to know how many risky adjustable rate mortgages there were? $1.1 trillion. Do you want to know how many subprime but not quite as bad loans there were? $1.3 trillion. That was just in housing. In the $3.8 trillion held by private equity, they own the largest shares of the home ownership market in the United States, but they also own the daycares. They own the veterinary clinics. They own the pet stores. They own the nursing homes. They own the emergency rooms. They own the doctor's offices, the orthodontists. They own the builders. They own the HVAC companies. This isn't just housing. It's going to touch every single industry around us.
So this is exactly what happened in the real estate bubble, and they were packaging subprime mortgages that ended up in people's 401ks and other asset portfolios. But this is happening in the pension funds. This obviously was not an accident since this happened in 2008. The banks were bailed out, and now we know that these CLOs are being held in pensions. So obviously these private equity firms are aware that they're going to bail out the pensioners too, right? That there's no way they're going to allow this to fail. And that probably is guiding their behavior. So the businesses involved in this, which span industries, just like she said, they're going to go bankrupt. Like it seems like they're going to go bankrupt. Here's a little bit of information about how these companies are getting bought up and run into the ground despite their profitability. She said that Joann's Fabric, which just went bankrupt, 97% of those businesses were successful.
Yeah. Private equity firms, all because KKR got the 2 and 20 built in years ago, 50 years ago. They go 2 and 20. That's 2% just to go ahead and manage the fund and 20% of the profits. So now these executives from one private equity firm to the next can go ahead and get their profits. They take their 2%, they take their 20% of profits, and there's going to be more profits down the road because they're going to do a deal with this company 5 years later, 10 years later, just to go ahead and make the books look like we're even. But we're not even. Because here's the deal that happened in the 70s and 80s. A little place called Drexel Burnham Lambert figured out that we don't have to go ahead and let these companies play themselves out. We can accelerate it. We can put lighter fluid on it. And Drexel Burnham Lambert, Mike Milken and the boys, they came out and they started giving out what they call junk bonds, right? They started giving out these loan shark loans to these companies, and the companies had to take them. They had no choice. They're called distressed credit investing. And whenever your company's distressed and you loan out this money, well, here comes private equity to give you a way in. But before they give it to you, the covenants on the bond. The covenants are the bond of the thing that people have to pay attention to. These bondholders take it in and they go, okay, I just have to give you 2 seats on the board of directors, 3 seats on the board of directors. That's it. Well, when they take these seats, now you see companies like Bed Bath & Beyond, like Radio Shack, like Circuit City, like Pier 1 Imports, like Tuesday Morning. We can name them all, right? But what are they doing? They're doing the wrong thing at the wrong time, every time.
Oh, man. And he does go into a little bit, he gets a little conspiratorial. I like what he has to say, but he relates this to Building 7, Jeffrey Epstein. Let's play clip 3.
All these partnerships, and it's all the way to the judges. It's in the lawyers. You go look at Sullivan and Cromwell. You tell me who they're connected to since the 1950s. You want to follow the money? You want to follow World Trade Center? What was it? Building number 7, where SEC was, right? It was the actual building of the SEC. Well, who was the actual original tenants of that building? Drexel Burnham Lambert. We can go ahead and look past Drexel, because Drexel got shut down in 1990, February of 1990. They got shut down. Well, who left that company to form other companies? The same private equity firms that you see, whether it be Guggenheim or whether you're looking at Apollo Global Management right now. Apollo Global Management comes in, and they have 6 founders, 3 of whom run the company: Leon Black, Josh Harris, and Mark Rowan. Well, you know where Jeffrey Epstein came from, don't you? Who paid for the flights? Who gave him $200 or $150 million for tax revenue services? Apollo Global Management, Leon Black. Why is it that private equity only does deals with private equity? It's deal to deal. That's it. I'm going to tell you one company that's been successful with private equity. Hostess. Out of the 99% of private equity companies that go bankrupt, Hostess seems to be the one that actually made a profit because the Twinkie, they actually carved out that asset. That was just a couple of years ago. Everyone else, they all run to the door for bankruptcy. And you've seen all the families get involved. The Tisch family. If you look at Zell's Jewelers in 1990, 1992, 1993, they go bankrupt, Zell's Jewelers. And when they go bankrupt, Apollo Global Management holds the bonds. Who was on the board of directors? There was a gentleman by the name of Bobby DiNicola, Robert DiNicola. And he's the CEO, chairman of the board. They go bankrupt. Who's the vice president? Sue Gove. And you go, wait a minute. Hold on. Bobby DiNicola. He then becomes the CEO of GNC. They go bankrupt, Apollo Bonds. You then have, he goes over to Linens and Things. They go bankrupt, Apollo. Claire's CEO goes bankrupt. There you go. 5 CEOs that ran Zell's Jewelers all went to Apollo-run companies and bankrupt them. The vice president of Zell's, Sue Gove, I don't know if you ever heard of her before. She's been on the board of directors at AutoZone with Eddie Lampart. Maybe you know him. He bankrupt JCPenney and Sears.
Lord. So you can tell that these private equity firms are just going into businesses with the express intent of bankrupting them. And the strategy, it's made individuals rich, but it's not creating anything. So Wall Street venture capitalists, private equity, it's destroyed the economy. And then it's hindered this connection between creativity and production and wealth creation.
And when you look underneath why, what are the two most or three most or four most incredible technological achievements that the Silicon Valley has created in the last decade? You're hard pressed to find it. So in one example, you have Elon. He's created reusable rocketry. He's created an entire global mesh of communications infrastructure. He's created electric cars. That's an incredible thing. And he's done that with one hand tied behind his back, meaning fighting the government, local, state, federal, at every single turn over the last 10 or 15 years. What have the rest of us done? We've created AirPods and Instagram Reels.
Because I know that like what's going on with the housing market right now is a little bit different, quite a bit different than what happened in 2008.
She doesn't say it anymore.
But she does make a valid point. And I know we've talked about this off air before. She does make a valid point. These are some of the things that Cameron has been talking about for quite some time. In 2008, you know, it's interesting. This is the one thing that no one really wants to talk about in terms of the housing crash in 2008 with the subprime mortgage crisis. There was like DEI inserted into home loans. There was a big push in the early 2000s for affirmative action, essentially.
They were giving loans to anyone.
Mortgage loans. Yeah. And that played a huge role in the subprime mortgage crisis that not a lot of people talk about. And I did like a whole episode on this. But yeah, I think there's a lot of things that I mean, we're on the brink. We're on the brim. It's all about to come crashing down.
But when they were issuing loans to anybody, they knew that they had already packaged these collateralized debt obligations. So that's probably what caused the push for DEI in home loans rather than the other way around. Yeah,
I don't know. I know Bush was pushing for it hard. Like he was pushing for it hard in terms of like, oh, we gotta push for black people to own homes. And I was trying to find this Trumpet article while we were playing these clips, but I couldn't find it. But this is something I covered quite some time ago. Another thing that's different is like right now there's a lot of equity, right? People have a lot of equity in their homes. People have low mortgage rates. So it's, you know, if something is going to crash it's going to be something different than what caused the crash in 2008.
Right. He does talk a little bit about closing the carried interest loophole.
Right now, all I want to do is get someone to pay attention that can make a difference in this, because we have a problem. We're not without any hope at all. Right now, private equity is only allowed to be this exploitative because they exist under something called the carried interest loophole, something that multiple Congresses have tried to close, but private equity continues to bribe politicians to fail to actually achieve. Trump, 3 weeks ago, said he wanted to close the carried interest loophole. I thought he was doing it as a fundraising maneuver, but he's doubled down on it repeatedly. If we can make enough noise about this, maybe we can get him to actually see it through and end private equity's stranglehold on our population. There's so much more that we have to go through, so this is going to be a multi-part series. But if you're new here, my name is Tiffany. We work together to fight private equity and save small businesses in our community, and it's going to take every single one of us to do so. So
there you go.
And she does talk a little bit about how it was, it didn't happen immediately. You know, one president reduced or kept the number at like 60 of people that can be invested in a company. And then I think Obama raised it to 1,000. And then all of the restrictions were taken off. I might be wrong about who did what. But Cameron, do you think that closing the carried interest loophole, is that really going to turn this whole ship around? It seems like that's not going to make that much of a difference, but...
Yeah, so no, it probably will not. The issue with what we heard this person go through, I don't exactly know her background either, but I have done research on private equity. I have a company that is in the private equity space. Unfortunately, what we're dealing with is the unwind of a bubble that goes back at least to the 1970s, if not further. Let me explain what I mean for a moment. When the United States came off the gold standard, it did a lot of things to the economy that many people know. Certainly, we deindustrialized, we embraced globalization, we pegged the dollar to oil, things of that nature. But a broader financialization of the world is really what happened. There's something called the euro dollar, for example, which is a better way of capturing the dollar system. And basically, what happened is you had a global recognition that in order to do economic activity in the world, you had to transact in dollars. So you had all kinds of institutions outside of the United States, based in this case in Europe, that were lending in dollars in addition to the money that was coming out of the United States. There's also the Asian euro dollar, which is basically the same thing, except it's done by banks in Singapore, Hong Kong, and other parts of Asia. That has created a gigantic debt bubble. Now, what happened in 2008 is that we had a subprime mortgage crisis, which basically pricked a bubble in multiple bubbles in the economy. Now, fortunately, that was the only one that really gave, but the playbook was to get the government to bail them out. Now, we talked about that a moment ago, and I'll come back to how that plays a role in this in just a moment. Previously, you'd had banks like the Federal Reserve banks that would bail out long-term capital management, which was a hedge fund that went bust. Or you would have bigger banks like JP Morgan that would step in and swallow up smaller banks. Some of that happened during 2008. But in 2008, it was so big that the government basically had to step in and become the lender of last resort and had to guarantee the liability of all this toxic debt. That's one problem. What she's talking about, however, is private equity. All of this machinery is basically tethered to low interest. And as soon as the United States left the gold standard, we could then lend out huge amounts of money because everybody wanted to invest their capital in the United States. That has kept interest rates relatively low until about now, until about the 2020s. The standard procedure is as follows. And if you understand the financial system, I've talked about this before, you have to borrow to buy. That's what private equity does. That's what a lot of the big banks did. And in order to borrow to buy, you need to leverage. And you can do that so long as rates are low. Once you borrow to buy, then you rehypothecate. Rehypothecate is basically a fancy way of saying you're sharing collateral. So you come up with all these kinds of investment vehicles, mortgage-backed securities, CLOs, CDOs, whatever. But basically, it's taking one piece of collateral and it's building all kinds of leverage on top of it. That's how you scale that buy that you made. So that's step number two. Once it all goes bust, though, then you get the government to come in and backstop you. Now, why would you do this if you had some sense that the pyramid would break? Well, they didn't know. They thought that low interest rates were here to stay. And that's why they built the adjustable rates into them. Unfortunately, interest rates are rising. Why are they rising? Because for the first time in decades, we have inflation. When inflation begins to hit, and it really started with COVID, then interest rates start to rise, and that pricks the bubble. The problem with this report is she's talking about private equity, but there's a bubble in commercial real estate. There's a bubble in government debt. There's a bubble in junk debt. It goes on and on and on. What we're beginning to see basically is the demolition of the global financial system, full stop. That's why I have said to all of you, you need to get prepared for what is to come because there is no way out. This time, the governments themselves are so broke that they won't be able to backstop Wall Street either. Most people don't believe that, but I'm telling you, that's how this ends. And that usually means the destruction of the currency and some kind of an economic reset. That is the beginning, basically, of the reset that we're starting to see now. That's what's happening.
You're telling me that all of this is built on the supposition that we were never going to sustain a period of inflation at any future time. They must have known. They must have known.
Inflation since the 1970s has been there, but it's been relatively controllable. And part of the reason for that is because when the central bank, when the Fed does things like quantitative easing or it lowers rates, whatever, it's always interplaying with the banks. The banks don't necessarily pass that money on to the consumers. What's happened since 2020 is direct stimulus that's come from the government. And that's in part because the economy has been so hollowed out by the very private equity activities that we're talking about, the financialization and all the rest of it. Basically, what I'm saying is the United States is a financial system with an economy. It's not an economy with a financial system. But the answer to your question, Rebecca, is no. Everybody thought that we could continue with relatively low rates and low inflation. Why? Because they believe that the whole world has to transact in dollars. And what's beginning to happen is that the rest of the world is now onto the game. they're beginning to de-dollarize. They're beginning to move their assets away from US dollar denominated assets and into things like gold or oil or real economic activity. That's why we are now in significant trouble, and you're beginning to see these bubbles unwind.
How wildly hubristic of us to think that everybody was going to adhere to the dollar forever.
Right. Well, and then especially to weaponize the dollar like we did against Russia by freezing Russia's treasuries.
Yeah.
Right.
And so then all of a sudden foreign countries start to understand, hey, wait a minute, this is a weapon. This isn't like an asset. I can get rugged immediately by the U.S. government, basically for any reason,
Right.
at any time.
Millions of people today are doing real estate swaps on the side. They're investing in meme coins, okay? Everybody is part of the game. And the reason is there's nothing left. There just isn't that 9 to 5 pathway to climbing the socioeconomic ladder at all. It's been completely hollowed out. And all that's left is brand named Americana. That real economic dynamism that we became famous for in the 20th century, that's dead. It's gone. Those industries have withered on the vine. And basically what's happened is a greater fool theory that's embedded in financial markets, whether that's in Silicon Valley or it's in Wall Street or it's the bond market. It just doesn't matter. All of these financial vehicles are what everybody ties their wealth to. As Vince said a moment ago, if you're a baby boomer, what pays you out? It's a dividend check that comes from your stock portfolio, or it's your 401k, or it's your pension fund, right? It is not real economic activity. And you have to remember that in addition to this, and what compounds this problem even worse, is that you have all these liabilities that are tied to the system. And part of the reason why pension funds are doing this, why they're investing in these risky investment portfolios, is because their liabilities are so great, they're trying to make up ground for them. In other words, they're trying to find gains wherever they can to plug these gaps. And now we've got a contagion of systemic proportions. Look, what I'm telling you people is very clear. We are headed for a kind of financial crisis I don't think we've seen since the 1920s, when people were going to banks to take out money to buy stocks. And that worked very well until the stock market collapsed. Something like that is beginning to happen. And I don't think there is a way out of it this time, except maybe to go to war to keep people in the dollar. And as I've said before, that's in part why this war with Russia and Ukraine has happened.
I've had you on my show often talking about a potential housing market. We've been talking about this, you and I, for like 2 years, 3 years now. The potential housing market crash. I just found this old video that I did from 3 years ago. It's called The Coming Equity-Induced Housing Crash. Be prepared. So we've been talking about this for a while. On this video, I actually go over, there was this act that they tried to pass. It was called the Down Payment Toward Equity Act of 2021. Do you guys remember this? Where in the act, it actually says individuals that qualify as socially disadvantaged individuals, they were going to give them up to $20,000 for a down payment on a home. So they tried to do the same thing that I was talking about back in 2008. Obviously, we know the subprime crisis was caused by, a variety of things, but this was one factor. This was potentially another factor coming up. But, how long do you think that we have? I've been asking this question to you, Cameron, for 2 years now. How long do you think we have before we start to? Because, think about this: for the housing market for the price of houses to fall back down to pre-COVID levels, we would have to have a housing market crash bigger, almost double what we saw in 2008.
Right.
For the cost of a house, average house, to go down to pre-COVID levels, we would have to have, basically double the size housing crash that we did in 2008.
20 to 30%.
Yeah.
Crash.
It would have to be, like 30, 40%, 50% in some cases.
And then all this equity is getting wiped out, which was not something that we really experienced in 2008 because people were lending on nothing.
And speaking of private equity, we've got, companies that are just buying up foreign companies, foreign people. When I lived in California, around the block from me, some Chinese dude bought a house cash, just parking his cash in real estate.
It
because
happens
they
in
can't own
Seattle all
anything.
the time. Yeah.
Yeah. So it's like, if we want to do something about the cost of housing here, not to sort of get off subject, but I tweeted this out the other day. It was like, if you want to do something about the cost of housing, just deport 30 million people and ban private equity from,
Right.
That's relevant. This is all related.
Building. I mean, because like up here where we live, the developers have been going absolutely nuts. They've been doing nothing but build, and like these like incredible like apartment complexes and these like really shitty homes, basically made out of like
plywood,
toothpicks, and glue. You know what I
have
mean?
you seen the trends? Have you seen the TikTok videos? Like I watch these TikTok videos of
inspectors
going through homes and like seeing all this shit that's just like broken.
This is a gutter to nowhere. This house is going to flood. This electrical is going to start the house on fire.
And I stopped to talk to one of these builders over here, these companies building these apartment complexes all over the place. And I'm just trying to see if these are going to be like low rent housing going up around here, because that's how they change the demographics of areas. And they're like, oh, it's some builder from California or some foreign company or whatever, like building these. It's like, what the fuck? Of course.
I mean, the good news is that, like, we've got Mark Wahlberg lives on the lake. The Kardashians have a house on the lake up here. Justin Bieber has a house up here, right? There's a lot of the Aherns, right? The big Las Vegas. I don't think it's a casino.
Yeah, but it's nobody's primary residence.
But what I'm saying is, like, they want a nice place where they can go on vacation in the summer. They can bring their grandkids, go out on the lake. If they bring in a bunch of Section 8 housing here, they're not going to be able to do that anymore.
But they'll just put their money somewhere else. They don't care. They don't live here. They don't care about the community.
I mean, I'm trying
Didn't Dave
to be
Chappelle's-
a little white pilled here, okay? I'm trying to give reasons why North Idaho isn't necessarily going to suffer like everywhere else.
I do love it here. I understand.
The issue is counterparty risk, right? That's the answer to your question, Vince. And that is to say that because the dollar has become this cancer that's spread around the world, that's backstopped for all intents and purposes by the Fed and the US government, it means that if Silicon Valley Bank, which is really basically servicing venture capital funds, if that blows up, that affects the U.S. Treasury market, because what are they holding as collateral? U.S. Treasury bonds. The yen carry trade, which blew up in August, that pertains to the Japanese bond market and inflation. Well, they have to deal with inflation, which means they're selling U.S. Treasury bonds, which they hold as collateral. Again, that has ripple effects in the United States, or it means that Japanese that are buying large amounts of NASDAQ stocks are suddenly selling those stocks, okay? Or if you look at New York Community Bank, which was bailed out by Steve Mnuchin and some hedge fund that he runs, that pertains to multifamily housing, which is also suffering, and that's suffering for a whole range of reasons. Some of that's economic, some of it's commercial real estate, which reflects a fall in economic activity in the cities that then affects the municipalities and the local governments. Look, the fact of the matter is as follows. When I was working on the Hill, this is back in 2010, I read a report that was published by Moody's. And Moody's is a credit ratings agency, not a very good one. Neither is Fitch or any of the rest of them, because they all work for Wall Street. But basically, this report concluded in 2010 that public entities, governments, et cetera, were so bankrupt that the Western world collectively was going to face, quote, fiscal adjustments that would test social cohesion. Now, as I said, that's just one part of this debt bomb. Private equity is another. Commercial real estate is another. The Japanese bond market is another. European banks, et cetera, et cetera, et cetera. So the point is that this is a machine that's beginning to spiral out of control. It's basically laced dynamite, and it's blowing up, as we can see. The question is, how much longer can they contain that explosion in these various spaces? I don't think much longer. And remember that that's against the backdrop of wars overseas, social instability at home, generational problems between millennials and baby boomers, so forth and so on. There's all these other problems, in other words, that are now layered on top of that. That's the situation that we face.
It's like we don't know what's going to happen. Like there are some models out there that are saying that, well, housing is going to go up another 20% in the next 10 years before it actually finally comes back down again. You've got some people that are, one of my friends texted me the other days, like in some ways I feel like the country is holding its breath while waiting for the big shoe to drop, like war with Iran or a recession.
Totally.
It's like people feel like I can feel something's coming. I don't know what it's going to look like, but I can feel something's coming. Like something big is coming. If you look at there's this thing called the Civil Unrest Index, and it's been at like the highest level ever since like 2021.
Oh, wow.
Zero Hedge talk a lot about this. You saw that the stories of these like billionaires buying up these
The bunkers.
the bunkers
Yeah.
in like what they call safe countries like New Zealand
Right.
and so forth, because I think that that see like something is probably coming. And then speaking of what you were talking about with these people on the lake, like they don't want low rent housing built here. It's not just rich white people that don't want low rent housing built here.
It's also rich black people.
Also rich black people. We've got this article. Dave Chappelle, do you guys remember this? Spoke out against affordable housing plan in his community.
He's like, I don't want this. Yeah.
But guys, come on. It can't be that bad. I mean, just last week, Howard Lutnick was telling me that in Q4, the economy was going to be humming.
Eggs down $1 already.
Yeah.
You're going to see leadership that this country is missing. And this is going to be an economy that is explosive. So you're worried about someone pre-announcing? What they should announce is in the fourth quarter of 2025, this economy is going to be humming.
Oh, come on.
Eggs are going to be $1 less.
Yeah, but you
Heck
have to
yeah.
understand that this is exactly what people in Washington, D.C., in New York City, I think perhaps to a lesser extent out in California, because that place is such a mess. But this is what people actually believe. Why are they launching tariffs? Okay. They're launching tariffs because they believe that the United States remains the dominant financial economic power in the world. Now, as I said before, I don't think that's true. What we know to be a fact, however, and this is evidenced by the Russian survival of this massive amount of sanctions that we've imposed upon them since 2022, among other countries like Iran, China, and so forth, is that they survived, that their economy is still intact, and that they are actively, the BRICS and other international organizations are trying to find a way to transact outside of the dollar. That is the future. That's where we're headed. But nobody in the Trump administration, nobody in the Biden administration believes that that is possible. So they're tariffing people, which is only going to accelerate the very de-dollarization that's going to break the system. But here's the key that you got to understand. Donald Trump thinks, and part of this is he's just an old man. He thinks that the United States is just as dynamic, just as innovative, just as capable of an industrial power as it was during the 20th century. But that's just not the case. The industry's not there. The human capital is not there. What is the solution to this? Rebecca always asks me, what's the solution? The problem is the solution. We need to unwind the financial system. It is a cancer that is preventing us from growing our economy in a legitimate and sound fashion. We've got to wipe out Wall Street. We need to reset the entire economy from the base layer up. Trump's not going to do that. It's going to be imposed upon him, and we'll have to see if his administration survives it. I don't think they will.